is also the reason why, although the size of the German stock market is small, the leverage ratio of the corporate sector can be lower than that of capital market-dominated economies such as the United States and the United Kingdom. Many German family businesses have a preference for operational independence, which also leads them to tend towards self-integration capital. Under the corporate governance model in Germany, whether it is debt financing or equity financing, it means that the financing enterprise needs to partially transfer control or operate independently. The deep participation of German banks in the corporate governance of financing enterprises has a substantial impact on business decision-making. According to the survey on SMEs refusing to lend by KfW, more than % of the surveyed enterprises will maintain their corporate independence as the reason for not lending KfW. Hermann Simon pointed out that Germany's invisible champions still hold a reserved attitude towards going public, and they generally believe that independence is clearly more important than fast-growing companies. German corporate financing DIY also means that the corporate sector actively and Japan in China, and less attention has been paid to the German financial system. There are not many Chinese literature on the German financial system, and the lack of analytical analysis and even inaccurate factual descriptions may be misleading. Of course, the motivation that directly drives us to study the German financial system is still a strong question. Understanding China's economy has entered the stage of high-quality development and is accelerating to form a dual circulation, with domestic circulation as the main body and domestic and international double circulation promoting each other, which puts forward higher requirements for the adaptability, competitiveness and inclusiveness of the financial system. Is China's financial system capable of carrying out new missions? How can we be competent in the process of financial development, reform and regulation? How can we scientifically learn from international good practices? What can we learn from the market-oriented financial model of the United States and the United States? What cannot we learn? How can we examine a country's financial development from a political, economic, social, cultural, and historical perspective and draw objective conclusions? What foundations need to be consolidated in the evolution of the financial system? The question of overcoming inertia and the like is necessary for China to build a modern financial system. Starting from financial reform, from information to trust and from trust to credit can be achieved, thereby significantly reducing the phenomenon of umbrella collection on rainy days. The system of managing banks. The interaction between German banks and enterprises has always been known for its long-term and close nature, so much so that banks are called butler banks. A German bank will accompany an industrial enterprise the entire process of decline and change from cradle to grave, from establishment to liquidation. Is on page a vivid portrayal of this relationship, against the backdrop of the transformation of large banks, the development of internet banking, and the increasing demand for, secondly, The financial national strategy is the most prosperous. There have always been rumors of American conspiracy theory in the financial market. For example, the United States wants to force the RMB to appreciate, just like Japanese asset price bubble in that year, and let China's economy fall into recession. The Southeast Asian financial crisis is believed to be largely due to the financial conspiracy of the UK. The UK used international speculators to destroy the Hong Kong economy, allowing the Chinese government to take over a mess like Hong Kong, while the US cooperated with its actions to profit from it. No matter whether the conspiracy theory is established or not, finance has actually been regarded as an important means of national strategy by the United States and Britain. They are controlling the redistribution of global resources by financial means, such as using finance to control the world's agricultural civilization and industrial civilization. The prices of agricultural products, energy, and resources are all controlled by the futures market. In addition to being regarded as a national policy measure, finance itself has also become an end, such as the United States launching the Kosovo War to prevent the return of European financial capital and blow up the euro. The organic combination of political deception, military strikes, and financial gain has become a common national policy tactic in the United States and Britain. From this it can be seen that financial civilization not only has economic significance in the United States and Britain, but also has significant political significance value. Thirdly, the logical deferral of the industrial economy is the most classic there. The rise of the old financial industry in the UK as a result of the Industrial Revolution, raising funds and taking on risks, have supported huge investments in transportation, energy, raw materials, infrastructure, and other aspects, promoting manual production to fully enter the industrial civilization era of large-scale machine production. The Dow Jones stock market in the United States provided the main financial driving force for the development of industrial civilization. Through the listing of enterprises, a bridge was built between industrial civilization and financial civilization. For example, the compensation of company executives was changed from the payment law of industrial civilization to the payment law of financial civilization, which instantly magnified the hard work and linear accumulation of company executives. In the stock market, and the Nasdaq stock market plays a bridging role in the grafting of new economic civilization and financial civilization, using the interests and rules of financial civilization to stimulate Americans' innovation enthusiasm, which in turn promotes the development of new economic civilization. Exchange members holding exchange member stocks and all financial institutions can participate in securities trading (ISOs) activities. Abolish various financial investment regulations, and banks began to provide comprehensive financial services, including securities business. In OMS of regulation, the Bank of England has transferred the regulatory function of the banking industry to the Financial Services Authority of the UK. The financial Big Bang in the UK completely destroyed the financial division of the UK and Commonwealth countries and promoted the integration of merchant bank business and stockbroking business, as well as the integration of commercial banks and investment banks. Commercial banks in the UK have successively acquired and merged securities brokers, gradually emerging a group of super financial institutions, covering various fields such as banking, securities, insurance, trusts, etc., becoming a versatile financial group similar to Germany. Just as the Thatcher Revolution triggered a wave of global market-oriented reforms, the City of London's finance exploded. The explosion triggered a global wave of financial liberalization. Japan Tokyo financial explosion. Japan's financial liberalization reform directly refers to the sample of the UK which is called the Tokyo Financial Big Bang. This is short. The Hashimoto Cabinet of Japan was launched on July with the core of promoting financial liberalization by relaxing financial regulations. The main legal basis of the Tokyo financial explosion is the Foreign Exchange Control Law and the Bank of Japan Law. The main content is that Japan will relax foreign exchange trading restrictions and the venues for foreign exchange trading are not limited to licensed banks, and even supermarkets can engage in currency exchange. Japan's financial industry is officially moving towards free competition. The monograph. This book is clearly successful. 2. Taking China's issues as a driving force to study German finance. Of course, the aim is to obtain insights from this study reference. I think this is another noteworthy aspect of the book. As is well known, China's financial reform and development have always been accompanied by learning from developed economies process. In my memory, the first person to enter the vision of reform designers was Hong Kong, China. Its main experience was that under market economy conditions banks are more than rice shops. So a wave of large banks, mainly savings offices and other financial institutions, emerged in the mainland. However, after all, Hong Kong, China is only a city economy, and its experience is difficult to match that of a large country. Therefore, the perspective of learning naturally shifted to our neighboring country, Japan, which is just a strip of water. As a result, there was the promotion of large institutions, professional banking systems, integration of industry and finance, and host banking systems in the 1980s. However, the rapid development of the Chinese economy quickly placed the task of establishing a more advanced financial system in front of Chinese reformers. This more advanced financial system should not only continue to provide long-term financial support for the large-scale industrialization process but also provide assistance for improving the capital structure of Chinese enterprises, and also provide incentives for future-oriented but risky entrepreneurial capital. So the focus of learning ultimately fell on the most developed financial industry in the United States. Undoubtedly, since the 1990s, China's financial reform has been more or less influenced by the United States. whether it is the establishment of a capital market main board, a small and medium-sized board market, a growth enterprise board market, or the establishment of real investment banks, as well as the design of governance mechanisms for financial institutions. However, it is regrettable that over the past 20 years, China's financial system has indeed introduced many beauties. However, some of the institutional arrangements that we most hope to introduce into China, including developing multi-level capital markets, increasing the proportion of direct financing, and improving risk investment mechanisms, seem to have not taken root in China. These mechanisms and markets are urgently needed for us, and we repeatedly repeat these demands in financial reform plans. This fact prompts us to reflect. In recent years, more and more serious researchers have begun to question this. Should we re-examine the rationality of these reform goals, which have always been at the top of the list for more than 20 years and have achieved little success? It is the relationship between people's livelihood and well-being and macroeconomic. When the total increase in housing prices in Germany was only % in the average annual growth rate is only %. This is in sharp contrast to the rapid foam of the real estate market in Britain, Spain, and the United States over the same period, which rose as high as %, and %. Thanks to this, Germany has maintained a virtuous cycle of real estate finance and the real economy, avoiding real estate, and is accustomed to using the laws of industrial civilization and information civilization to explain, study and judge financial problems. The development of the securities market according to geometric series conforms to the laws of financial civilization, but meets the logic of industrial civilization regulation and intervention according to the development of arithmetic progression, the so-called P/E ratio, securitization rate and valuation model in the inherent knowledge system have been repeatedly denied by the market, but they are still regarded as the supreme. Being conservative towards traditional knowledge and unable to understand the arrival of a new civilization may result in schizophrenia. Integrating and responding to the four civilizations in a timely manner will lead to a winner-take-all in the market.